MACD is an oscillator, although it's often called a trend indicator or even a trend oscillator in quant. It happens because MACD is based on two moving average indicators applied directly on the chart. They are not displayed in the MACD chart, only their readings are used. MACD itself is displayed in a separate window under the chart. It looks like a histogram with an auxiliary line. The histogram shows that divergence of two moving averages. If one of them moves away from the other, the histogram bars become longer. If the moving averages get closer, the bars become shorter. Thus, rapid movements will result in long bars in the MACD histogram, and flat will be indicated by short bars. If the histogram is above the zero line, it means that the fast-moving average will be rising above the slow one, gradually moving away from it, which indicates an uptrend. If the bars go below the zero line and the fast-moving average is below the slow one, it's a downtrend. The auxiliary line, which sometimes intersects with the histogram in the indicator window, is the moving average that has been calculated based on the MACD histogram readings and not the price chart. This line is designed to receive additional signals from the indicator. To avoid any confusion, let us call it a MACD moving average in quant. Fast and slow MA are the moving averages. They are applied to the chart and provide the data for the histogram. The greater the difference between their periods, the more rapid changes the histogram will show. More often than not, these parameters remain default, unless a specific strategy requires otherwise. MACD SMA is a parameter of the MACD moving average itself. The higher the parameter, the further away the average will move from the histogram, and they will intersect less often. This parameter value allows to adjust the accuracy of the signal within an indicator-based trading strategy. The higher the parameter value, the fewer signals there are. Next, you need to set the parameter, open, close, candlestick's highest and lowest values, which will determine the remaining criteria. Finally, you can fix the minimum and maximum parameters. The histogram will not go above or below them. Other tabs will allow you to set the color range, change the time frame or add levels that are a straight line on an indicator. It's set to 0 by default. Additional levels might be required by a certain strategy for tracking the signals. For example, selling of an asset at the intersection of the top level on the chart. Once the indicator has been set up and applied to the chart, you can start trading. There are both simple and more complex MACD trading strategies. To understand the MACD principle, let us look at some of these strategies. Simple MACD strategy. The simplest MACD strategy does not require any additional indicators. MACD signals alone will be sufficient for determining the entry points. With this strategy, the orders are opened as follows. If the MACD histogram crosses the moving average upwards, the buy order will be placed. If the MACD histogram crosses the moving average downwards, the sell order will be placed. The recommended stop-loss level is set below the minimum level of the candlestick that determines the entry point when buying, and is above the maximum level when selling. The take profit should be 3 times the stop-loss or at the closest key price level. MACD convergence/divergence trading. MACD convergence/divergence signal is one of the strongest ones. Convergence is expressed in approaching the moving direction of the MACD histogram and the price chart. It looks like this. The chart shows how the price movement slowed down after a strong downtrend, reversed and then went down again, hitting a fresh low. At the same time, MACD also shows a local minimum, but it is higher than the